Okay, here we've got TradingView with NQ futures and 1 minute candles. Today is Thursday, May 22nd. This vertical line here means it's the start of the New York session, which is 9:30 a.m. Eastern Time. I get that vertical line from Lux Algo Sessions Indicator. It shows the high and low of the day dynamically as the trade of the day progresses. I don't like to trade the first half hour, as I always say. It's too choppy, and it's a good example today with the price going up and down, swinging down 30 points and up 30 points. It's tough to trade that. Can you scalp that? Some people can, but it's not easy, so I just like to avoid that. And this is 10 o'clock right here. That's when I like to start trading. We're going to look at some good trade opportunities for today. So when the market opens, you see this squeeze momentum oscillator. I like to look at the oscillators to see if price is moving. It's very flat. We've got these midline dots, or dark color in the middle. That means we're in a squeeze. Price is in a squeeze. And then when they turn white, that means price is moving again. Now they're a little slow. Price started moving and they were still here. So these dots are a little late to respond, but we can look at some other oscillators to get a preview of that. So I like the Wada Atar explosion oscillator here, and you can see price, the buy volume starts breaking out above the dead zone line here. So this is when I start paying attention. We get a preview even earlier than that with the wave trend cross oscillator down here. It was pretty flat and then it started moving up. So this gives us a preview of something might be happening. Even though price is looking flat here, it gets up to the midpoint, which is the 0 here. We see these two lines start to spread apart, and we've got the Wada-Atar oscillator showing the buy volume, and then the price is starting to move up here. It could be a good time to trade. So let's take a look here. I like to see that price was in a range, and I've got this indicator here, this RID. Let me show you that. It's the range identifier by Lazy Bear, and it shows you high and low of the ranges. Now it's not perfect. Sometimes the range carries on and the lines don't, but it gives you a few good tips. So here you could see that it looked like price was ranging, and then it broke above here, and I like this. So price pulled back a bit, and then I would say I'd go long here when price goes back above the previous candle, because I like this buy volume. So if I was doing, I'm going to show you two things today. All these trades I've already marked on here are from 10 point stop loss, 20 point take profit. So you can bring it up like this, and it's in ticks here. Let me show you one of these existing ones. So 80 ticks is 20 points of take profit, and 40 ticks is 10 points of stop loss. This is a good way to get some easy wins, because it's not hard to capture 20 points. So price moves up here, and easy 20 points, and then we keep looking down here, and price is still moving. I like the separation from price and the EMA 21. That's this yellow line in the middle here. Let me bring it up. It's nebula. Well, it's right here. It's EMA 21. That's the yellow one. Good separation between the price and the EMA 21. That shows the price is moving strong. So although we closed it here, I want to look for another opportunity. And I like this candle here. It still looks strong, top of this candle. So I put a limit order to go long above that. It doesn't pull back very far, and if I waited for a price to pull back all the way to the EMA 21, which I love it when that happens, but sometimes it doesn't happen, I could still say that I'm going to put a limit order above the previous candle, and then if price pulls back when it goes above the previous candle, then get me in. And so I'd get in here, and that's an easy 20 points in a couple of minutes. And then price pulls back a little bit, not as far as the EMA 21, which I like, but it pulls back enough. I would put another limit order to go along right above the previous candle, and it wouldn't hit on this one, but it hit on the third candle here, and that's an easy 20 points. So is there any more after that? I'd say no, although price does keep going up. When I look at the oscillators, I see that the Wada-Atar buy volume is starting to dip down, so I probably wouldn't although obviously I could have, but I didn't know it was going to keep going up. But another way of doing this, which I like, is have two orders. So instead of just opening the one order to go along for 20 points to take profit, have a bigger one and let it run. So let's pick one. We'll pick a long. That's a short. Let's pick a long here. And we'll pick a bigger one. This is a 50 point take profit. We'll say open at the same point. So imagine that I didn't open one order, I opened two. So one had a 20 point take profit, and that was an easy win. But the other one, I just let it go. And when would I get out? Because I could set to something like 100 points, and I could have hit that easily, so that's great. But if I was just watching the price action, it comes up here and we get a doji here and then another doji, so I'd be thinking that we might be done, but we had some dojis here and it kept going. So it goes up a bit more, another doji, and then here down hard. The Wadatar color here is empty. That means we lost our buy volume, and the color of this outside color of this candle is different than the buy volume going up, so this could be the end. It goes up one more time before coming down here. I'd be getting out right here, and that's when the I've already seen from the oscillators at the bottom that squeeze momentum thinks price is going down even though it kept going up. That's the divergence. And our wave trend thought it was going down. Our Wadatar thought it's going down. So when I see this sell volume above the dead zone line, then I'd be definitely getting out there. So I could have got 100 points and just not worry about it there, but if I hung on, I would have went right to this candle right there, and that would have been 91 points. So I could have got an easy 20 points there, plus I could have got another 90 points with a second order. And if I captured the first 20 points and then this one, the price suddenly pulls back and stops me out, I like to move my stop loss to break even anyway. So as soon as we get above 20 points, this would be a break even stop, but at least I got 20 points instead of getting nothing, because sometimes if you just have one order, you get nothing if the price pulls back and hits your stop loss. But instead I got that 20 points, plus I let this run, and I would have got 90 points here. So let's get rid of this. And now we're on a downtrend, and we're going to do a similar thing here. So when I look at my oscillators, well, I like the red color of the orange color of the sell volume going down. I look down here, and it looks like we're on a downtrend. I like when I see the sell volume appear above the dead zone line right here. That's this candle here. So I already marked it. I'd go short here. Put a sell limit order so price can pull back as far as it wants. Here it only pulled back a few points. And then when it comes back down, it gets me in. And then I hit that take profit just a couple of minutes later. And then am I done? Well, I'd be looking for another chance to go long because we still got more sell volume, and the squeeze momentum thinks price is going down, say with wave trend. So I'd be looking for another entry. I like this buy volume, sell volume. So you put a limit order right below this candle here. So when price pulls back, as it did, when it comes back down, it would get me in. However, it looks like I lose on this one because it pulled back too far, and it would hit my stop loss and take me out. Say la vie, you can't win every trade. But I'm still interested in going short because you could see the downtrend and the strong candle colors of the watercolor in these candles. So where would I go? Well, it pulled back here, and I like this strong increasing sell volume on the Wadatar explosion above the dead zone line. So that'd be right here. I'd put a limit order right there to go long short, and sure enough it crosses, and a few candles later I get 20 points. Are we done? Well, I still like the separation between the EMA 21, that yellow line, and the price. It looks like we're still trending down hard, so I'd be looking to get in again. So there's two ways to get in. You can try to get it when it goes back close to the EMA 21, which is good here. Now if I waited for it to come back here, it's a while before it comes back here, and then at this point we're kind of done. The trend is over. So if I waited, I missed out on some more trades. So instead, When this candle looks like I've got good sell volume, I put a limit order to go short right below that candle. Price pulls back and then gets me in here. And then, yes, it comes down and it, oh, it doesn't, it gets stopped out here again. That would be another stop out because it doesn't pull down far enough to hit my take profit. So, c'est la vie, it's another loss, but let's take a look. Yeah, this is another loss here. I put that below. So that's the danger of not waiting for it to pull back. I got a few trades, 1, 2, 3 in a row. Instead, the alternate way is not just open one trade, but as I said, open 2 trades. So here we're going to go short and we'll do a bigger 50-point take profit just to mark it on here. We'll say the same entry right there. So we quickly got our 20 points to secure some gains. And then if I just let this go, how far down does it go? Well, I like this sell volume is increasing here, and then it starts dropping down right here, and the color in squeeze momentum changes here, and the wave trend starts to flatten here. So I'd be looking to get out right about here. So that's 50 points there. I could have got more if I could have wanted to guess when it was gonna stop, but if I just look at my oscillators to figure that out, and the price action, that's when it made a higher high above this. It sort of broke the trend of the downtrend there, so I'd be getting out with 53 points. So I got my initial 20 plus I let this run for 53. I'd be happy with those 70 points of gains. And I would have missed these, trying to get back on the trend going down. It was 3 times here I got stopped out. I would have missed those. Versus, I got 2 wins and 3 stop outs. That's 2 wins of 20 each. That's 40. But 3 stop outs of 10 each. That's 30. I would have got 10 points in that. Instead, I got the 20 plus the 60 of the other trade. So I'd be very happy with that. Let's take a look at this next part. This is important. Price starts going up here. I'm looking to where I can get in, so I could see squeeze momentum says it's going up and wave trend, but I don't see the buy volume appearing above the dead zone line of the Watt-Tar explosion oscillator here, so I'm not getting in. These candles, these are dead soul candles. They have no color in the middle, so I don't want to get in. And when I see the crosses in the middle of the squeeze momentum turn dark like this, then price is in a squeeze. So the safest thing to do is just wait this out, because people always want to trade with the momentum, trade the trend, and it looks like we're trending up here, but then it drops back down. You think, oh, we're going down then, but nope, it goes back up, and swinging back and forth here a few times. So I would have just avoided this whole mess here, because this is where traders lose lots of trades. So I keep looking here, and now would I've gotten in? I probably would have here, because we get some color back, some sell color back, and these candles, Watt-Tar explosion, it breaks above that dead zone line. I like the other direction of the other oscillators. I probably would have got in here. I could have got 20 points right there. Now if I would have did my other trade, do 2 trades, let's drop a 50 take profit there at the same point. And that's 50. Now when I got above the 20, I would have moved my stop loss to 0, and when would I have gotten out? This popped up too quick. I would have got stopped out that at the 0 at the break even there. So this second trade would have been inconsequential, but at least I captured 20 from this one, as opposed to if I just did 1 trade and let it go and I got stopped out at break even here, I would have got nothing from my trouble. So at least I got 20. So now price starts moving up, and buy volume above the dead zone line here. The 2 other oscillators agree. I'd probably try getting in here. I put a limit order right above this candle, and had some trouble moving up. Finally it did, but it didn't hit my 20 points and came down. I would have got stopped out there. A better entry is when the price pulled down to the break even, to the EMA 21 here, and I would have went, because I like going opening positions when it bounces off the EMA 21 right here, and I could have opened and closed right at about a minute for 20-point gain. So if I got my larger trade to let it run, I start at the same point. Whoops, that's the wrong direction. Let's get a long, not a short. Same place here. So where would that take me? Well, I'd get my 20 points, and then I move my stop loss to 0, and then very quickly it would come down and stop me out. And this second one would be inconsequential. I didn't lose any money, but I didn't get anything, but I got 20 from the first. So instead of getting nothing, I'm happy to get that 20 points. And now price starts coming down, but I don't see the sell volume break above till right here. So would I have gone short here? It looks like it's lower than the range. I probably would have tried to get in here. Let's see. 10-20, if I put a stop here. Yeah, I would have probably gone short there because I like that sell volume. It looked like it was going down. But then we got dojis and I got stopped out right there. So if I had my 2 orders, my second one, that would have stopped me out as well because it didn't get above my 20. So I would have lost not just the 10 points for one, but times that by 2, 20 points. But it's okay, we already made quite a few points early on. And then notice the crosses here in the middle of the squeeze momentum go dark. We got dark blue here. So then I'm thinking we're consolidating again. You can see the Bollinger Bands, the upper and lower, are shrinking, getting close together. The price is just going up and down, swinging up and down, 50 points up, 50 points down. Could you trade that? It's hard because you don't know how far it's going to go up. It could be up this far, and you might be thinking, okay, I'm going to go short here, and then it goes up 10 points, takes you out. Similarly, when it goes down, how far are we going down? I like to go long off the EMA 21, but not when it's flat like this. I like to go off the EMA 21 when it's trending up or trending down. Right now we're going sideways. So when's the bottom? You might be thinking, oh, here's the bottom, but then it drops another 10 points here and it could take you out. So it's hard to know where the bottom is so you don't get stopped out. Instead, we could just wait this out. Watch the squeeze momentum here until we see some momentum building again. And here's the buy volume breaking above, and you see some color above the squeeze momentum as well, as opposed to these ones. We got some buy volume above here, but we're too flat here. So we could go long after this. Let's put a limit order to go long right here. So I probably wouldn't because the crosses in the middle of the squeeze momentum oscillator are still dark, so I don't like that. But if we did that, what could we have gotten? Yeah, we would have got stopped out just a short time later. So that's why I don't like to trade consolidation. It's hard to know when's the top, when's the bottom. You thought the bottom was here, but then it went lower, and then you thought the top was here, but then, well, that was actually pretty close to the top. So let's see, the crosses start going on. It's dark the whole time. Although price is moving up this way, the cross is dark the whole time. So what could we have done? Well, we could just do nothing and have a coffee and just watch, or we could try to open a long while price is above the EMA 21. So let's say that we don't use the oscillators, we just look at the price staying above, and we say price comes down and hits the EMA 21, let's say, right here, like that. So we could have easily got 20 points there, or if we just say we'll keep it open while price is above and staying above. Although it breaks down here briefly, but it goes back up, and breaks down here, but the next candle goes back up. If we can hang on to it, while it stays above, and then it breaks through down hard here, we could have got something like 30 points. If we had a 50-point take profit, we could easily hit that. But if we just say, hang on, and then when we see the sell volume break above here, the dead zone line, and we already see the oscillators going down here and here, you'd be getting out here, and you could have got 46 points with that trade, which is not bad. Or just wait for the color of these midline crosses to start, go back to white, and sure enough it does. And then I got a few more examples. As we go downtrend here, price breaks below the EMA 21. I like the sell volume. Move this over a bit. Breaking above the dead zone line here, so I'd go short right here. And that's easy 20 points. And then I'd be looking for another one. So sell volume above the dead zone line again. You can see both other oscillators agree, so I'd be going short here. And this takes a while, but eventually we get our 20 points. And what about this one here? Yeah, we get 20 points here. It's dicey for a while though. See the limit order price pulls back, but we're not in the trade yet. We don't get into right here. And it pulls back a bit and almost hits the stop loss, but oh yeah, but it doesn't. Yeah, it hits the stop loss here, so this would be a loss. However, I like it when price pulls back to the EMA 21, but still look like we're going down. So I'd go short here off the EMA 21, and that's an easy 20 points. And then similarly, price comes back to the EMA 21, you can go short here, and that's another 20 points. So if you can wait for price to pull back to the EMA 21, those are safer trades. But let's look at the other option. So instead of just the 20-point gains, what if we had the other order to let it run and see how it goes? Let's drop a 50 on here, right there. And then where would we be getting out? Well, as long as the price is staying below the EMA 21, down, right to here. And that's when the buy volume breaks above the dead zone line. So let's move that over there, and we say, well, that's 50. We could have easily got 50 right here. But if we held it open, we could have got it, and it closed right there. That would have been 58, almost 60 points of gain. So we got our first 20 plus another 60. That's excellent gains. And it's easy to hold like this. When you've got some gains, you move your stop loss to break even, and you just choose where you want to get out. Probably price is not going to spike up to our stop loss at break even and give us a 0, so we're probably going to get something. So you just decide where and see how long you can hold it for. And that, in this case, would be right here. And then price breaks above the EMA 21, which is very indicative of the trend. And I like the buy volume, breaking above the dead zone line. Our other oscillators agree that we're going up, so I'd be going long right there, and that's an easy 20 points. It takes 5 or 6 minutes. And then I still think we're going up, so I want to get in again. I like the separation between the EMA 21 and price there. Our oscillator still said we're going up, so I'm looking for a good buy volume, which is right here. So I put a limit order to go long if price can get there, and sure enough it does. And it gets close to stopping us out. It pulls back, but eventually it comes up and hits our take profit at 20 points there. And then after that, I don't like how the oscillators are looking. This is moving down, and our volume dropped off. And although buy volume jumps up here briefly, I don't like the look of the squeeze momentum. It's very flat. We've got those dark crosses in the middle instead of the white ones. And the price action, although it's moving up here, it's super dead. It's hard to get in here because you think you're going to, it's breaking out here, and then boom, you get stopped out. You think it's going up here, and boom, you get stopped out. This is very easy to get stopped out. So the best thing to do is just to do nothing. Well, we've got these crosses in the middle are dark like that. So when does that change? Well, it changes right here. So this is where we start breaking up. Could I have gone short here? Yeah, I like the sell volume, but this had good sell volume here. I would have got stopped out. But this one, if I would have got short here, I could have, well, I would have got stopped out again. See, this is why I don't want to trade with these dark crosses. I don't want to open trades when these crosses are dark, because we're just consolidating. It's too easy to, you think we're going in one direction, and boom, pulls back and takes us up. So would you see this white cross here? It looks like we're moving again. So I like the buy volume, and the oscillators move in the right direction. So if I would have went long here, I would have entered the limit order there above this candle. Price pulled back, and then it would have got me right here. And it came close to stopping me out, but eventually moved up and hit my 20 points to take profit, so that'd be a winning trade. So I want to shrink this a little bit so I can show you the other option. Let's shrink it like this. So the one option is keep capturing these 20-point trades, but the other one is, instead of just opening the one 20-point trade, we'll open a second one and just let it run. So let's do that. In this case, we'll start with the 50 points right there, same point. So price is staying above the EMA 21. It drops below here. I could see getting out at this point. Let's put it at that point here. That would have been 50 points. So we could have, the second one could have just been 50 points and we would have captured that here, or when price dropped below the EMA 21, I could easily understand getting out here because the direction of the oscillators and the sell volume popping up there. But if you could have held on longer, it was more gains, because price quickly came back up above the EMA 21 and stayed there longer, and then we start consolidating here. So I would have got out. If I didn't get out earlier, I could have got out here, and that would be what, like 60 points? Yeah, 59 points there. So you would have got your 20 plus you would get another 50. That's 70 points, and then you wouldn't have to worry about it trying to get these other ones, because one of the hardest things about successful trading is the entry. Since we have a good entry here and we got in the money, we move our stop loss to break even, and we just hold on and we just see how far it goes when we want to get it. And it's unlikely the price is going to be up at the 50 and then drop down to 0 and give us nothing. But even if it did, we had our first 20 points of gain there, so we're already ahead. And then we just decide where we're going to get out, and then we don't have to try to time these. It goes up and then it comes back down, stops us out. When we're in the money, just let it run and see how far it goes. So let's get rid of this again, and we're almost done. This is right at the end of the day. I remember trading this. Let's see, I like the sell volume breaking above here, and the white cross appears. That means we're moving. That means these Bollinger Bands are widening. Yeah, I like the direction of the wave trend here. We got the cross, that little dot there shows the cross. We're crossing down. So I would have got a 20-point gain very quickly, opening a limit order just below that candle. And 5 minutes later, I got my 20 points, and I'd be looking for another one. So again, I like the sell volume above the dead zone line. Our oscillators agree in the direction, so I put a limit order right there. And then it pulls back, but we're not in the trade though. I wouldn't have got stopped out because we're not in yet. And let me widen this a bit so you can more easily see this again. So the limit order is below this candle. So although price pulls back, we're not in yet. We get in right here, and then it stays above the take profit, and we get our 20 points a few minutes later. Similar, I want to get into again because I like the separation between the EMA 21 and the price. I like the color, the sell volume color, looks strong. Well, let's do one more right here. We're getting near the end of the day. Often I don't like to trade at the end of the day because it's too choppy, and in fact you can see the chop there. So I would have got short here. Now price, I could have got stopped out very quick if, depending on when I got my limit order in. If I got in when it hit here, I would have got stopped out instantly. But if price pulled back and then I got my limit order on, then it could have pulled back as far as it wanted to before it comes down, gets me in here, and I get my 20 points there. If I would have got stopped out earlier, let's say I got stopped out in a minute there, I could have got back in. Let's go short here for another 20 points. Sell volume above here, I could have got in at the same point even, or maybe right here. That would be good. We got my 20 points about 5 minutes later, right about there. I could have even got one more if I put a sell on right near the end of the day. So we would have got stopped out there. 1, 2, 3, 4 winners and 1 loser there. The other alternative, as we've been talking about, is have one we just let it run. So let's put a 50-point take profit there at the same point, and we let it go. So once price gets above 20, I move my stop loss to break even, and we just let it go. And where do we go to? Well, in this case, price, well, it briefly goes above the EMA 21 here, so I'm be have my finger on the trigger, but it comes back down, keeps us in, and keeps going right to the end of the day. Let's say I close it at the end of the day. Right here, that's 121 points. So I could have had this set at 100 points for an easy 100-point win, or I could have let it go for another right to the end for 120 points. So we had our initial 20 plus another 120, 140 points. I'd be very happy with that for an end of the day trade. So those are my thoughts about the price action reviewing today, Thursday, May 22nd.